Hey everybody, welcome back. I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about the $7 trillion China real estate bubble that's brewing since pretty much last year. But it's actually starting to intensify. So what is going on right now? So Chinese people are refusing to pay mortgages. So essentially, it's common for homeowners in China to start making mortgage payments on new properties before they're even finished. These are basically payments funding the construction, almost like in the United States that we have construction loans for builders, and those funds are typically released in phases throughout the project. Don't forget to like this video and give us thumbs up so we can keep uploading videos with consistency. However, many projects are facing delays in China. So what we're seeing is unfinished projects sold by defunct real estate developers or people that are actually going under potential default. We've seen that with Evergrande, which we'll get into later in this presentation. So you can see in this slide here, these are the top 5 provinces where they're having these boycotts on these loans. And it's actually springing up all across eastern China. The bigger the bubble, the more projects affected. The biggest one is 40. The second biggest one is 10. And you can see all the smaller ones sprinkled throughout. So this actually equated to about 10% of properties sold last year, with a nominal amount as much as $297 billion and 3 cents 100, plus protests in 90 different cities. So to put this into perspective, the Chinese mortgage market is worth $7 trillion. The boycott is on basically 4.2% of it. So let's take a look at one of these specific developers. This is actually Evergrande. If you guys remember, a lot of people were doing videos on the Evergrande potential collapse. This was maybe like 6 to 8 months ago, even though this has been brewing for over a year now easily. So this is the big property crisis. Evergrande is actually one of the largest Chinese property developers. I believe is the largest property developer in China. They have $300 billion in debt. So right now, they're actually dodging outright default, but they are missing payments and inching closer to it. And the collapse of these developers could actually lead to a loss of 250 million Chinese jobs. Okay, that'd be huge. And we're going to get into why that's important for us. You may be thinking, hey Marco, I'm, halfway across the world, the United States, or in Europe, or wherever you're watching this from, this will affect you. I'll show you why. So this is why Evergrande crisis could be worse than the great financial crisis in the United States in 2008. So typically, these developers, actually residential real estate makes up 30% of China's GDP. Okay, this is absolutely huge. The Chinese property market is likely the largest asset class in the world. So if we take a look at this chart, you can see that this dark blue bar right here is residential property. You can see that the medium blue is fixed income, which are typically bonds, annuities, things like that. And then light blue is equities. These are stocks. Now look at that compared to the United States. Dark blue is right here, which is residential property. Fixed income is actually the largest market. And then we have equities, which are stocks right here that you can compare that to Japan, UK, and Australia. However, this boycott contagion is spreading from home buyers to suppliers. So it's not just the people that are buying the homes and the developers that have so much leverage right now. It's actually spreading to the suppliers. So you can see here, some suppliers to Chinese real estate developers are now also refusing to repay bank loans because of unpaid bills owed to them. This is a sign that the loan boycott that started with home buyers is now starting to spread. And the source of this is Goldman Sachs. So why does this matter? So if you look at Chinese liquidity, it actually moves global markets and global economies. Everything is made in China, you guys. United States doesn't really make anything anymore. We are a service economy. Yes, we can create things with engineers from overseas that become US citizens, but things are typically made in China. Your iPhone is made in China. Yes, it was designed in California, but it's made in China. Okay, so the world business cycle, this line is in orange. And then you can see the Chinese China Policy Liquidity Index is in blue. And you can see how they're somewhat starting to be tighter correlated. Later on, basically since 2010. And if you look at it before, I'm not really seeing a huge correlation there, to be quite honest. Some of it is there, but it's getting tighter and tighter as time goes on. So as long as the People's Bank of China liquidity deteriorates, we're going to see a slowdown in world business activity. A Chinese real estate collapse would affect the entire world. And Chinese construction home sales are 25 to 30% of GDP, as we established earlier. So let's take a look at the situation, why it's quickly deteriorating. So this is because of lockdowns is what we're guessing. If you take a look at this, I should have put a little Corona bottle right here. The surveys, so that I always talk about if you still haven't gotten that joke yet. I don't know what to tell you. Maybe it's not that good of a joke. It's not even a joke. I just can't say it because of YouTube. But anyway, we're looking at the second lowest real GDP growth ever since 2000. Okay, So this is going back all the way to 2000. This is China real quarterly GDP annual year-over-year percentage change. They've had steady growth all since the early 2000s, 2008, affecting everybody. That was pretty much a world global crisis. And then it's gone down, 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 down. Surveys have exploded back up. And now we're back down to just 0.4% increase in GDP year over year. So what does this cause? This causes wealthy residents trying to flee, taking their wealth with them. This is no different than what's happening in Russia and Ukraine. If you know anything about the Vancouver real estate market, it's a lot of Chinese money in there. That's why home prices are absolutely inflated. Same thing with Toronto, same thing with New York City, same thing with Australia. A lot of this money is leaving their shores. So this foreign outflow from the Chinese government bonds hits a record in June. And what is happening now is these banks are actually making a proposal, government's making a proposal for banks to forfeit their $4.6 billion in mortgage interest income, which will affect these Chinese banks. So how can you position yourself as always trying to create a scenario where you benefit from these things? That's the whole point of watching my channel. You may say I'm not a proponent of this. I'm not a proponent of Chinese equities at all, to be quite honest with you. But if you want to go into this arena, common sense would tell you to watch Chinese bank stocks. So the average exposure to property, including mortgages, is 17% across Chinese banks. I believe this is according to Goldman Sachs. And then there's a potential opportunity there. So you may want to take a look at that. Again, I don't touch Chinese stocks with a 10-foot pole just because of their accounting practices and things like that. If you want a brief history of that, take a look at Alibaba, take a look at Luckin Coffee or Luckin Coffee, however you want to pronounce it. Just Google those two companies. So anyway, number 2 is a Riyadh fire sale may be coming soon. So if you guys remember, like the Greek debt crisis that affected the entire stock market, that was in the early mid-2000s, China blowing up the real estate market could be a potential opportunity for the United States real estate market to be cheap as well. What we're talking about is not necessarily residential, but it could be REITs. So real estate investment trusts at a discount. Again, I don't know if it'll affect it that much. I think we're in an overall everything bubble, which I've made videos about. But you may want to take a look at REITs as well. Number 3 is accelerate China's shift away from the US dollar. If you guys, had your head in the sand over the past 2-3 years, or we see the BRIC countries doing Brazil, Russia, India, China, South Africa, Argentina even is trying to get into the BRICS now. They're searching for a safe haven backstop to the US dollar and the petrodollar system. BRIC nations may accelerate their switch over from the dollar standard and the dollar being a global reserve currency. Okay, so let's get into my thoughts on this. So I worked in commercial real estate. I worked for a boutique real estate development firm. We owned about 750,000 square feet of office space and a couple other different property types, and also a couple 100 units of multifamily. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.